The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the podcast on Monday, the 8th of March, 2021. On the podcast today, Ron Lipsky, VP of Business Development and International Relations at MGC Pharmaceuticals. That's MXC ticker. And Ron discusses recent progress at the company after becoming the first medicinal cannabis company to list on the LSE a month ago. Also on the podcast, Alan Green, the CEO of Brand and Communications, talks about smart metering systems, logistics development group, and we'd also talk about non-fungible tokens. Plus, at the end of the podcast, I have two lists for you. Very, very important lists. The first one is the top 5 most followed companies on Vox Markets in the last 24 hours, and the top 5 most read RNSs out today. Plus, if you go to voxmarkets.co.uk, you'll see lots of other content. There's an article there on Blackbird. There's one there on Avacta. There's another one there on Tech Capital. Another one on Amrit Pharma, worth checking out. And of course, our COVID-19 index, which is the biggest rise of the day, actually, Tech Capital, up 20% to 17.5. Biggest faller, Gfinity. It's down 4.76% to 4 pence. Check that out at voxmarkets.co.uk.
Vox Markets is an online community of investors that runs a free mobile and desktop platform that allows you to track news and updates about any UK-listed company, offering RNS push notifications, detailed charts, pricing data, and much more. Find out more at voxmarkets.co.uk/app.
And joining me on the podcast right now is Ron Lipsky, VP of Business Development and International Relations at MGC Pharmaceuticals. MXC is ticker there. Ron, thanks for joining me.
Thanks for having me, Justin. Great to be here.
Yeah, very exciting, hot space at the moment. Now, MGC Pharma became the first medicinal cannabis company to list on the LSE a month ago. Can you tell us a little bit more about that and some background to the business, please, Ron?
Surely. I think you really hit the nail on the head when you started out by saying first to market, because that's something that we've always been. MGC is a leading phytocannabinoid, which means medical cannabis company. Mm-hmm. We've been in the field for 7 years. We started out RTOing, so doing a RTO in Australia. So we've been publicly traded basically for our entire existence. And this recent listing on the LSE is a very significant milestone for the company. It demonstrates that we've done what we said we were going to do until today and beyond. And having a successful listing on the LSE means that we have a very bright road ahead. In general, just to summarize the company, we consider ourselves to be a phytocannabinoid-based biopharma. That means that we manufacture pharmaceuticals headed towards central market authorization, a la Epidiolex and Sativex from GW Pharma. Mm-hmm. We're quite ahead of other companies on the road to these kind of approvals because we have a very, very robust clinical trial pipeline, as well as in-house clinical research services that allow us to, again, be ahead of the market and ahead of the curve in this regard. Our view has always been that phytocannabinoids, the elements of the cannabis plan, are going to be revolutionary in healthcare treatment, but it's very important that they operate within the parameters of the industry as it understands pharmaceuticals. So we've really always set ourselves at a very high standard of learning how to manufacture and produce in any vertical that we're in. So MGC Pharma has already owned and spun out a cosmetics company that was the first successful CBD company to bring products to the high street in the UK. We were in Harvey Nichols. We've launched a successful nutraceuticals brand, again, based on phytocannabinoids, which we sold to an American company who are using it now to widen out their nutraceuticals offering across the United States. And what that says to us is that we've built a successful pipeline of products. Along the way, we've always been working on our biopharma focus. And today we find ourselves with 2 proprietary pharmaceutical preparations, one called Canapil, the other called Cognican, both phytocannabinoid-based, which means they do come from the cannabis plant, but via API, which is active pharmaceutical ingredient, a very, very clean element of any pharmaceutical pipeline. And we are engaged in clinical trials to get these to market quickly while being able to sell them in multiple regions, which is something that distinguishes us from other biopharma companies out there.
Excellent stuff. Okay, so brilliant summary. So you've signed a couple of interesting supply agreements for Artemic. Can you tell me a little bit about those, especially the ones last week, Ron?
Sure. Well, Artemic, I'll just start by describing it as actually a non-phytocannabinoid product that we have that has had very successful results in clinical testing for COVID. So obviously, this is something that has happened in the last year. Just like any responsible company, we had to find a way to be productive and efficient during this very difficult period. And what we did was we focused our clinical research on something that we thought could really impact what's happening in the world. And we've been very, very fortunate in finding this product, Artemic. Currently, we're able to sell a version of it as a food supplement while we take steps towards our phase 3 clinical trial, which will cement its status as a medication. So the supply agreements that you're referring to are with our global partner for the distribution of Artemic, Swiss Pharmacan. And this is a company that is moving very rapidly and making agreements, so that the announcement from last week was actually an expansion of 85% from an announcement from 2 weeks before as far as their volume of ordering for Artemic goes. Now, as a phytopharma company who's been fighting to get every patient and dealing with legislation in every region, for us, this is a game changer because, we have a product that can basically fly off the shelves without difficulty. And we're very excited to see what Swiss Pharmacan are doing with it while we engage in further clinical trials to develop this product as a pharmaceutical.
Yeah. So just talk about that, the COVID-19 Artemic there. Can you give us a bit more detail on the clinical trials there, please?
Sure. So we have taken our product, Artemic, which is a naturally based supplement, as I said, on its way to pharmaceutical. Mm-hmm. And we have run phase 2B clinical trials in 3 locations, 2 hospitals in Israel and a hospital in India. And our results have been, to say the least, really, really great. What we're talking about is, full double-blind placebo tests on patients that come to the hospital and are diagnosed with COVID. Artemic is an intervention that can be provided immediately after registering positive on a PCR test. And what it's done is it has halted the cytokine storm. And anyone who's delved a little bit into what happens with COVID knows that the cytokine storm is essentially the dangerous and fatal element of this virus. For the most part, people who don't approach it end up staying at home and feeling pretty bad. People who end up with a cytokine storm taking place in their body end up in ERs, end up in ICUs, and then the numbers of the survival numbers drop perilously. What we've found, and our clinical research is available on PubMed and through our website, et cetera, we've published all of this, is that we were able to halt the onset of the cytokine storm. So right now, basically, there's a food supplement on the market that can eliminate a lot of the fear that comes with COVID infections in the world. And given the rate of vaccination, given the rate of reinfection, given the rate of people in the world who don't have access to vaccines, et cetera, we think this is a really compelling product. And we're excited to take it to the next level because the cytokine storm is not something that only has to do with COVID. It's across very many indications. Yeah.
And so is that going into phase 3 now? Is that right?
It is. It's initializing phase 3 studies, which are going to be taking place in Israel, Brazil, and India. Mm-hmm. And I think over the next 6 months, we're going to be able to finalize this. Our goal, as I said, is to bring a product to central market authorization. MGC has 3 such products that we're focused on over the next 2 to 3 years. And Artemic is definitely the lead product out of those because of fast track access. MGC has become part of the WHO task force for COVID. So we have a lot of support around us globally to move this project forward as quickly as possible.
Yeah, cool. And just take us through some of the other products and trials going on at the moment, if you could, Ron.
Oh, well, I'll focus on our 2 lead products. These are Canapil and Cognican. Canapil is a refractory epilepsy product. That means it can treat any kind of epilepsy that has not been treatable with other solutions, which is a very wide indicator. If you look at something like Epidiolex, that's prescribed for only Dravet's and Rett syndrome, which are two very specific forms of epilepsy. Our product, Canapil, is for any epilepsy that is not being served by current medication. We are starting our phase 2B trial in Israel and in Slovenia shortly. Recruiting children is obviously a little difficult these days with corona limitations, etc. And we expect to be bringing this product to central market authorization soon. And again, I'll just point out, unlike other biopharma companies, as a phytocannabinoid-based company, we are able to have products in clinical trials and sell products at the same time to patients. So it puts us in a very different situation, and it gives us also real-time data about some of the formulations that we're using and the ability to, ensure that they're at the best levels for any patients.
Yeah, absolutely. Cool.
And then I'll cover Cognican real quick. I apologize. We have a lot to talk about. Cognican is our treatment for Alzheimer's dementia. This is basically a product that we see as being a real game changer for aging populations. Dementia and Alzheimer's are affecting much of the aging population in the world, and we're endeavoring to build a clinical pipeline that will provide Cognican as a solution to a lot of the stress that comes along with these kind of diseases and problems. And our promising clinical pipeline for this product is moving forward in Australia with University of Notre Dame, and we expect to also be bringing Cognican to central market authorization in the coming years.
Excellent stuff. And talking about the coming years, map out your ambitions, your targets for the company. Then, if you could, run over the next couple of years, 3 to 5 years, maybe.
Within the next 3 to 5 years, MGC should be holding at least 2, if not 3 or 4 central market authorizations for products with wide indications globally. That means that if we just follow the model of Canapil, which we've looked at the international market for epilepsy, refractory epilepsy, and find it in the multi-billions, we're going to have products in, as I said, dementia and Alzheimer's. We have oncology products that we're developing, and of course, Artemic. So our goal is to be a biopharma with holding multiple central market authorization products, which we believe will shift our position dramatically. MGC has always been a biopharma company, and a biopharma company that was part of the pharma world as opposed to being part of the medical cannabis world. That's a distinction that we've always held on to very closely. In the coming years, we're really intent to separate ourselves from the pack of medical cannabis companies and establish ourselves as a full pharmaceutical company with the ability to treat millions of patients worldwide.
Excellent stuff. Okay, Ron. Well, every day in the podcast, I highlight the top 5 most followed companies. So to get on that list, of course, people have to hit that follow button. So give people now, listeners now, liking the sound of this, give them 3 reasons why they should hit that follow button and add you to their watch list, please.
Okay, well, it's hard to choose only 3, but I'll start with this. We are a first-to-market company in an emerging field. We are holding a unique position regarding our IP and our abilities as opposed to anyone else in the market. Our listing on the LSE, the first medical cannabis biopharma to be listed on the LSE, is an indication of institutional trust in us. I think if you also look at the investor base that we've developed initially in the UK, it's a very, very solid institutional investor base, which means that we're putting the right information out there and we're demonstrating that we have a serious road ahead of us in the future. I see what we're building as Johnson & Johnson 100 years ago, Pfizer 100 years ago. There is a huge market for treatment with these kind of pharmaceuticals that we are creating, and we are intending to take advantage of all of that market because we have the unique IP and the ability to do that today.
Excellent stuff, Ron. Good to chat to you, and hopefully we'll catch up in the not-too-distant future. Thanks very much.
Looking forward to it. Thank you very much.
The Vox Markets Podcast with Justin Waite.
And joining me on the podcast right now is Alan Green, CEO of Brand Communications. You're Al.
Morning, Just. How are you, sir?
All right, yeah. It's a bit chilly this morning, wasn't it?
Bloody! Do you know what? I was down. I was down in the office here at 7:00, and it was -2 outside.
Yeah.
I'm looking out, thinking, how can it be -2? You know, it's a brightish morning. Well, it's a bit grey here and there, but it's just freezing, absolutely freezing. So you think, come on, let's enough of the cold weather. We've had a good run of it. Now let's bring on summer. Bring on those sunny days, bring on those barbecues, etc., etc.
We had a barbecue last. Well, no, in fact, the missus decided to volunteer me to do the barbecue last week, right? And it was freezing.
Oh, you did a barbecue?
Yeah, it was freezing. Actually, they're all inside, in the warmth. There's me outside on the barbecue, thinking, this is ridiculous. What are we doing this for? And but it was, last week, same as this week. Starts off very cold, bit of sun then in the afternoon, and so she was encouraged by that. And then it got cold towards the evening when I was doing it, so it's just not enjoyable at all. Just chuck the burgers and the things in the oven. Go anyway.
Exactly. Well, actually, my wife showed me a picture over the weekend. April, I think it's beginning of April last year. I was out on the patio here doing a barbecue, traditional charcoal barbecue, and I was in. I had no t-shirt on, just a pair of shorts in the blazing sunshine. It was that hot. So if we get that in about 4 weeks' time, I'll be delighted.
Yeah. Marvellous stuff. Okay, let's get the stocks out. In fact, he's thrown me now. Just thinking about your bare top there. Oh, wow.
I know. Sorry. Maybe that's too much information.
Did the missus say to you, listen, Al, get your top off because I don't eat too much. I'm on a diet. I'll throw my appetite a bit.
Well, it was one of those typical pictures of guy cooking barbecue, English sunshine, can of beer on the barbecue, and everything's smoky away, blazing away, and I'm just looking very pleased with myself. It was, but I do cook a good barbecue. Everyone tells me I do cook a good barbie, so that's.
Al, they do that just to get you doing it.
They do. Yeah, because no one else is mug enough to do it. Excellent.
Cool. What's first stock up?
Okay, we have spoken about this company quite a few times over the years. Actually, it's a real cash cow. This is just a steady earner and a great company. Smart metering systems is the epic code, SMS, and of course, as the name implies, it provides smart metering systems. And I think a couple of years ago when we spoke about this, the meters that they were supplying weren't quite as smart as I think we'd anticipated. But they've certainly dealt with that issue now. Of course, this is smart metering for gas, electricity, energy management, data collection. That's meters in the home and of course meters in industry too. If you look at the share price performance, the company's currently got a market cap of 850 million. Shares were as low as, in fact, almost this time last year, they dropped off like everything did to 436 pence.
I look at dip here. In fact, hang on, it didn't really dip that much in March. It did a bit in March, but back in, I don't know what happened there, but in September of 2019, it went down to £3. It really dipped down and then came back up, popped up to like £6. Then the dash for cash in March, it went down to sort of, about 450, somewhere 440 odd. And then it's grinding back up now towards 748. Anyone, do you know what? Fear is our friend. That's what we should think of.
Fear is our friend.
If you got cash, fear is a friend. And that's jump in when the market, as Buffett always says,
blood on the streets.
Blood in the streets, everyone's greedy, be fearful. And be greedy when everyone's fearful,
Well, that point where it dipped to £3 in September 19 was the point at which they realised that the meters that they were providing weren't quite as smart as everyone had hoped for. So
did they say, we got the board put out a meeting then, thought we can do one or two things here, guys. We can rename the company Dumb Meters, or we can make our meters smart. Up to you.
Not quite so smart meters, yeah. No. Anyway, I mean, the rollout took time, and I think there was a general reluctance to take them up. But there was a bit of a pivot by the company last year, which has really contributed to the cash flow and the financial position of the company. In March last year, they did a deal with Columbia Threadneedle Fund to develop what they call the Care Pipeline, and this is a bunch of of assets in grid scale battery storage, smart solar power. Of course, we've spoken in the past about various solar funds and how they're performing. They have a company in Australia. Also, an EV. They're invested into an EV charging infrastructure, which of course is going to be hugely important in the next few years. What the company did in order to raise the money for this, it sold its meter assets at the time to Equitex for $290 million, and they've used that money to invest into the care infrastructure, and also to give investors some visibility going forward in regard to a long-term dividend policy, and reshaping the capital position of the company. Made good progress. The objective of the company was set out to hit zero net emissions by 2050, and that was stated by the company last year. Made good progress through the year, and then there was an update in December 17, which really, I think, moved the company on, and has resulted in the strong share price performance that we've seen since that time. The company said installations were 80% of the pre-COVID run rate. The care pipeline had already secured 170 megawatts, with another 150 million megawatts under exclusivity. It was also the full year for 2020 was marginally ahead of consensus expectations, and it was also confident of 2021 consensus too. But most significantly, it's on schedule for net zero by 2030. So it's brought that net zero date forward by 20 years, which is, in 9 months, considering we had the COVID backdrop, is pretty impressive. Recurring cash flow supports a 10% increase in year-on-year dividend payments from the full year 2020 through to 2024.
They're calling you a bit correction now, I think.
Yes, it does indeed. It does.
Friend. Go on.
It does indeed. Right, I'm just going to turn that off. Apologies about that. The chief exec said that the care assets were at the heart of the low-carbon smart energy going forward. Further updates in March, new contract wins with the two fast-growing independent UK energy suppliers, and the acquisition of 15,000 large power electricity meters for £8.5 million, which adds basically over £1 million a year to their earnings. And again, the group said it's a testament to the strength of the data platforms it has, and the fact it's got the ability just to absorb and consolidate these such value accretive opportunities. So the company has really restructured net zero power, gas, electricity power, net zero by 2030, and for investors, I mean, it's a cash cow anyway. If you got into the stock certainly September last year or even March last year when the share price tipped off, you'll have seen a very strong return on your capital. And of course, there's a small dividend payment as well of about 0.5%, but that's going to increase by 10% year on year through to 2024. So again, it's a niche operator, very strong cash generator, and really, we've all got to have our power. We've all got to pay for our power. There's very little prospect, in my opinion, that very little that could come along to really significantly rock the earnings outlook for this company for the next 2 to 3 years.
Mm-hmm. All the stuff, yes. SMS, there's a ticker there. Easy to remember. Good. It's nice, slowly grinding higher, the chart there. What's next, Al?
Okay, we've spoken, of course, about Eddie Stobart. Of course, they've now Eddie Stobart Logistics renamed to Logistics Development Group, and the company really has seen a renaissance in its performance over the past year. Of course, we had the Eddie Stobart. Just to start with, the actual company, Eddie Stobart, or as it is now, Logistics Development Group, owns 49% of Eddie Stobart Limited, and that includes I4 Supply Chain Management, Logistics People, Speedy Freight Couriers, the Pallet Network, and of course that iconic fleet of trucks and logistics infrastructure business that we know so well. there was the company was looking at a potential sale to Wincanton in 2019 when a big hole was discovered in the accounts, which created a huge crisis at the time. A company called D-Bay Advisors came in, injected 70 million into the group at about 32 pence, and that company then became White Star Acquisitions, which owns the other half of Eddie Stobart. So Eddie Stobart effectively became a cash shell. Good progress by the group. A fellow called Adrian Collins joined the company last year as chairman of the group. And in October, they announced revenues have progressed well, slightly down, 1.1% down at 416 million. And EBITDA was up 363% to 16.5 million. And they were projecting at that point full year EBITDA of at least 33 million. Also axed a bunch of loss-making contracts and initiated pay down of the debt mountain that had been identified. And obviously, as the major supplier to Tesco, as we know with food deliveries during lockdown, and I think post-lockdown too, enjoyed a very strong run and cash generative period. New contract wins with Morrison's, Nike, Amazon, and others. Just saw a very strong performance by the group. Then in December, announced placing an open offer to raise 16 million to convert to an investing company, and of course the name change then came in February to Logistics Development Group. The placing was oversubscribed, as they usually are. Well justified. As you know, I'm a shareholder, have been all the way through, holding a 5p, and the open offer of 5p basically issued gave the rights to buy a further 37 shares for every 100 held, and I took my rights up on that. So we now have a situation where the company is funded, obviously owns 49% of Eddie Stobart Limited. It still has a market cap over 107 million, so that to my mind doesn't reflect the value in the sort of turnover that the Eddie Stobart Group delivers. But also it's now able to make further acquisitions and invest into other companies within the industry. And I think in many ways it's a counterintuitive investment. You'd imagine with Brexit and all the issues around there that all these companies are having a tough time of it. Not so. I mean, I looked at Expediated the other week, and they're having a good run too. And I think this is, given that we're going to be operating more from home, and a lot of people, despite even when lockdown's lifted, won't be going out. They'll still be ordering this stuff to home. I think the logistics industry is set for a pretty buoyant few years. We're in the run for logistics development. We're in the run up to full year results on May the 25th. Shares, of course, pushed a lot higher after the money was raised, topped out at just under 21 pence, currently trading at just under 16 pence, and still, to my mind, offer great value, and I remain a holder.
What do they do? I don't even know what they do anymore. What do they do? The same thing, do they, or what? So Logistics Development Group, they own, so Eddie Stobart Limited and all of the associate companies, they own 49% of that asset. So all of the income that and the benefits that come in from Eddie Stobart, they see 49% of that. Green White Star Acquisitions own the other 51%. But Logistics Development Group have raised 16 million in their own right, so they can now go out and invest into other haulage companies and other assets within the industry and develop and proceed. But whether they will, of course, remains to be seen. But given the run that Eddie Stobart are having, and also given the fact that Eddie Stobart shares were valued at had a market cap of just under $1 billion before all this happened, I think at 49%. This company still has a market cap of 107 million, so I think there is some scope for upside. Given that, but we've discussed that before. Al. Previous performance, price, and valuation is just nothing on the future, because it's a different business, pretty much, isn't it? Anyway, listen. Let me ask you a question. Yep. Non-fungible tokens.
Yes.
Right? Shall I buy the King to Leon? Non-fungible. Do you think it's worth buying?
I do. I think it's a fantastic idea, and I think this. Just looking at where non-fungible tokens are what they're doing for digital assets. I mean, a video clip. Reuters put that story up about a video clip, a 10-second video clip, selling for 6.6 million. A piece of art sells for millions. An asset. There's this. I was chatting about this at the weekend. There's a kind of digital land grab going on. There are all these assets out there, and all these areas in which assets can be monetized. I mean, we were even looking at, say, classic vehicles, for example. Once a car or a motorcycle or vehicle is over 40 years old, in most cases it becomes tax exempt. It's then classed as an historic vehicle. Now, if the DVLA played ball, you could create an asset out of that. So you could divide that vehicle up into NFTs, and that the status of that would be reflected at the DVLA database. So it's such a nebulous area. There's huge potential. But to back to your original question about Kings of Leon, buy the album as an NFT, because you could get a limited edition picture disc if you're into vinyl. When they start playing gigs again, you get front row seats at the concert, and a bunch of other benefits too. And I think I also did a piece on Coincillium at the weekend, and we spoke about Coincillium previously. Coincillium have just set up Nifty Labs in Gibraltar to basically build the smart contracts for these NFTs, and of course the NFT platform is based largely on the Ethereum platform, but Nifty will be building a bridge onto Bitcoin, so they can use Bitcoin smart contracts. So eventually you get to a point where you have an app on your phone, you think, oh, that's quite nice. So I've got 10,000 Bitcoin. I think I'll use a bit of my Bitcoin to buy an NFT or buy the Kings of Leon album, or buy that album, and that then becomes a seamless transaction.
I think I've got. I think I just bought it. I set an account up. I don't know if it's done yet. I'm waiting for confirmation. But I didn't realise. I reactivated all my Coinbase and all that stuff and my Binance, and I looked in there and I had like. But $100 of Ethereum. It wasn't that much, about 2 years ago, obviously. But I thought, okay, I'll use that for that Kings of Leon album. But I'm trying to do it now. But it's you have to go through a MetaMask and then through OpenSea, which is where it's an auction, and then.
It's a convoluted.
I don't know where my thing is though. It says buying it, but I don't know what's happened here. Let maybe confirm it when it's done. But I thought, because they're the first artist who's done it, it could be worth something, couldn't it? You never know, And
but also it solves at a stroke the issue that artists have, because all of these streaming websites that grab the music and stream the music, of course, the big ones like Spotify and everything else, that's fine. But you get all these pirate websites that will grab the MP4 and then stream it and earn money from it, and the artist never sees a penny. With the file as an NFT, because it's blockchain based, you've got that immutable record that tracks it all the way through. So the artist can trace the sale, where it's up for sale, or the ability to market it on certain platforms, and it just brings a whole load of possibilities with it. In the same way that we're talking about these COVID apps that will identify, an individual's COVID status using blockchain background. It's the digitization of assets, and I think we're right at the start of a revolution. It's hugely exciting, and then of course you then apply it to, could it be applied to classic vehicles? Could it be applied to, well, obviously art and other assets? But you could publish something online and then sell it on. I mean, William Shatner, Captain Kirk, he's selling lots of his old memorabilia as NFTs online, and it's pretty cool that he's involved, because he might be a pretty zany character, but he's obviously very clued up on the business front, and he's taken to these NFTs.
Yeah, that's filed under the folder Shatner.
Shatner, yes, okay. Rather unfortunate surname there.
Yeah. Marvellous. Cheers, Al. I don't know if I've bought. I've tried to. I don't know what's going on there. Maybe it'll confirm it when it's done it.
Well, you're further down the road. You're further down the road than me because I've not actually bought an NFT yet. But I am going to. It's a good exercise, actually. I think just to.
One thing I learned about Bitcoin, everything, new tech, right? One thing I learned is be early. Sometimes you don't have to be right. Sometimes if you're early,
be early
the first wave rises very quickly, and even before people figure out there's a new way or an evolved way of doing this, the value of these things. I mean, listen, I remember looking into Bitcoin, trying to figure out how to buy Bitcoin when it was round about $600 something like that a Bitcoin. I thought, oh, so that $600 a Bitcoin, I'm not paying that. And I didn't realise you could buy fractional parts of it. But then I sort of give up. And I thought, look at it now. I thought, well, I should have actually bought that, shouldn't I? Because it's at 100 bags pretty much so close to since I first looked at it. But so be early and you don't have to be right. But as long as you're early sometimes on these things, it's okay.
Yeah, it's absolutely huge already, though. I mean, I think there was a stat. It was either an article on Forbes. I think it was on a Forbes article. The top 100 NFT sites generated 2.9 billion in contracts. I think last month, and I think the average trading per day for 1 week was something like $750 million. Yeah. And that's just the top 100 NFT sites. So it's already here. It's already huge. But I mean, we're just right at the start. I mean, you can digitize everything. I mean, presumably house sales. If you wanted to sort of sell property that way, there's all sorts of ways that you could look at this. I mean,
yeah. So that guy who sold that for 6.6 million, that Trump sort of bit of art. It's quite good. I'm on this OpenSea now, which they say is the largest NFT marketplace. Buy, sell, discover, rate digital items. And a lot of the art on there is trash. It's like, wow, that's rubbish. I would buy that. But I don't know what I'm looking at, really. Just nonsense. But, and I suppose, so you buy it, and it's all very well. But what do you do? Stick it down as your screensaver or license? I suppose it's all about licensing. If other people like it and they say, oh, it's owned by Justin, so I better go and pay Justin the fee to use it on my website or whatever. So you've got all these pick rights companies now too, haven't you? So digital, photographs online that are used. There are companies tracking usage of them and checking out the license. So this is the same sort of process, but it just applies to all assets. But huge marketplace, and I think we're going to see a lot more companies. In a way, this is almost like the Bitcoin boom again, isn't it? You're going to see a lot of companies getting into NFTs and offering a version of that service. Okay, I've no idea if I bought this. That's the trouble. There's rankings here. They've got the top 10 non-fungible tokens there. Oh, no, more than top 10, but it was Kings of Leon. That's at 17.
So I suppose you buy the album and then you play it as an MP, or you download it onto your what would you download it onto? I suppose iTunes or.
I have no idea. I have no idea what I'm doing. Just I bought it, I think. It's like cost about $100 altogether with gas, so it's quite expensive for an album. But it's you got other things with it. It's not just an album; it's artwork that But I don't understand. There we are. Who knows? There we are. We'll have to see.
Interesting.
This time next week, Alan, if it gets delivered, I'll tell you. Okay.
Okay.
Just faster to go and buy it on Spotify or listen to. Anyway, marvellous. Cheers, Al. Thanks for that.
Cheers, Jess. All the best.
Okay, it's time for the top 5 most followed companies on Vox Markets in the last 24 hours. They are at 5. Compass Group. It's a biggie. It's a FTSE 100, I think, isn't it? They are up 2% to 1579. At 4, Barclays up 2.55% to 175. At 3, KR1, a non-mover right there. What are they at there? Done very well this year, 150. At 2, Vodafone Group. Wow, it's up just a smidge, 0.1% to 124. And at 1, Premier African Minerals. Really? Up 50% to 0.177. 8 billion shares in issue there. Okay, top 5 most read RNSs are as follows. At 5, Compass Group. Oh, hang on, no. Sorry, most read. I'll do the most followed again. At 5, Hemogenics, H.C. Wainwright Investment Conference. At 4, Deep Verge change of interest of significant shareholder. At 3, Argo Blockchain land purchase issue of consideration shares. At 2, Avacta Group rapid antigen test detects SARS-CoV-2 variants. And at 1, Omega Diagnostics grant of options. What a boring RNS. It's most read. Wow. Okay, check those lists out at voxmarkets.co.uk.
The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.